Hi there. What if you could invest in property using your tax rebates? Well, now you can. The Joseph Company has created an opportunity for you to invest in property using your tax rebates. And this is how. Since 2009, investors have been getting tax back through Section 12J of the Income Tax Act. Section 12J allows investors to deduct the full cost of specific investments against taxable income. That's right. Through the Joseph Company, you can invest 100% of your income tax into profitable investments in student accommodation. This benefit is available to individuals, companies, and trusts. It can be utilized against normal income as well as capital gains tax. The Joseph Company has partnered with Impact Africa Investments to help you invest in selected profitable businesses. For more info, visit our website, call us, or let us call you. Invest now, save your tax, and be more. The Joseph Company, raising a company of people.
And just in case some of you were wondering whether this is just a big farce show, this gentleman here has been around the block a number of times. Welcome, Chris.
Thank you very much.
And you're going to be taking us through Section 12J and what it is and how it is that you guys work with the Joseph Company to raise equity.
Very much so.
Absolutely. Take it away.
No, thank you very much. And, from a point of view, very often when we start to talk about 12J, people start to think, this is something that sounds too good to be true. Can you get your taxes back and invest it? Normally we think SARS is going to take money away. And I look at it from this point of view. If the bus comes around the South African Breweries truck comes around the corner and overturns, we don't have any problem. Free beer for the day. All right. But if the SARS truck pulls up and stops and they open their windows and say, free money, we think, oh no, this must be surely too good to be true. No, let me get my mind around it. And this is what 12J evokes in people, is that we think it's in disbelief. But Section 12J is a tax incentive, and the tax incentive is there to help raise money for small and medium enterprises through channels that they wouldn't normally get to. So, for instance, we've built a Section 12J model in a way that we can get money for almost any kind of business, and one of the businesses we are doing it for is the Joseph Company, to raise money for student accommodation. Now, the thing about raising it is that we can unlock money. All right, by raising some, it gives the possibility of co-funding. And very often your development financial institutions, I call them the alphabets, the DTI and the RDCs and the IECs and all the rest of it, they don't part with money if you don't have money. But if you've got money, they'll do co-funding and that. And this gives the opportunity for people who do not have access with collateral, they don't have a credit record, or they don't even necessarily have a track record, that they can actually get money for their business and then maybe go on to get.
I hear you speaking about businesses and how you're able to help businesses.
Yes.
What about individuals? How do individuals get involved in Section 12J type of instruments?
Well, basically, it's really getting your tax back from SARS and investing it into a business. All right. So how 12J works generally is, let's take, for example, I'll use the example of R1 million.
Yeah.
You take R1 million out of your pocket and invest it through a Section 12J company. In other words, a small or medium enterprise, or maybe even a startup, maybe a company that needs capital, that's struggling at the moment. And so what we can then do is, with that investment of R1 million, you then go and claim that off your income. So if you were earning 1.5 million and you made a R1 million income, your income goes from 1.5 million minus the 1 million investment that you made into the Section 12J. It means that your taxable income is 500,000, and that's what you pay tax on. And that R1 million, you probably get maybe up to 400,000 rand back in tax, which goes to your investment. So you make a 1 million rand investment, and it only costs you 600,000 rand to make that investment. The problem is, where do people get that 600,000?
Yes.
And so what we've designed is a geared structure to actually access that investment. And so what we do is we advance a loan to the thing, and Section 12J allows you to actually
So
borrow
before
money.
so before
Yes.
we lose you, there are two elements to this.
Yes.
So the one Mpo goes along, and I'm interested in Section 12J, and I
Yes.
must do it before the end of February because
Yes.
it's coming to an end. I'm gonna say, Chris, I want to invest. Let's say I own I earn R1 million a year.
Yes.
So what then happens is that the taxable portion of my income
Yes.
makes up for tranche one. Let's call it
Yes.
tranche one.
Yes.
So it still doesn't make up the balance of the million.
Yes.
So the second part of this instrument
Yes.
is that between whatever my tax was
Yes.
and the R1 million deficit,
Yes.
there needs to be that
An
money needs to be
investment,
made up.
yes.
Where do I get that money?
So this is where we advance it.
Okay.
In other words, we actually create a loan structure
Okay.
that enables that full investment to be made. Okay. It's a loan that you have to take full responsibility for.
Yeah.
All right. But we do something interesting. In other words, before we actually put this money at risk, it's still in what's called the venture capital company.
Yeah.
So we can write that as a zero interest rate loan because we're not taking risk on that money at this point. All right. And we then also able to take cession of certain assets, and we'd write it as a limited collateral loan or defined collateral loan. So we take cession of the tax refund, we take cession of the share certificate, we take cession of any dividends, and we ask investors to put down what we call a securing deposit of 25,000. We also take cession of that.
In essence, all of that is what helps make up the collateral, so to speak.
That's correct.
So this loan that is about R1 million loan, that's not
Yes.
really R1 million loan that I'm
No,
taking out.
it'll work out to be maybe a 600,000
because the 400 or so is made up by my tax
Yes,
income, so to
that's right.
speak. And then the balance of it is then covered by you guys as a loan structure.
Yes.
But now I'm a pessimist.
Yes.
Everything goes terribly wrong.
Yes.
And now I'm into you guys or whoever it is I've borrowed money
Yes.
from. I don't want to lose my house because I took up the scheme.
Yes.
What risk am I exposed to?
So we've taken those 4 sessions to cover our interest, because effectively you've got more than R1 million, more than R1 million in collateral against maybe a 600,000 loan.
Okay, so let me
Right.
get this right. So the session on the taxable income that
Yes.
and the second session is on the deposit of 25,000 rand
Yes.
that I put down. The third one on the future dividends that could come out of this.
And the asset itself.
And the asset itself.
In other words, the investment,
all right.
the R1 million, because you create a loan of R1 million,
Yeah.
and you create an asset of R1 million. You pay down the loan with the taxes, so that means you've only left with a net 600,000 debt, and there's sufficient collateral to cover that.
So in layman's terms, I get an investment of that much, essentially for giving up my what I would have paid to the
Yes.
taxman anyway.
Yes.
And worst case scenario, if nothing works out, I'm only in it for 25 grand.
Well, we're going to seize the collateral.
Yes.
All right, and you've got to pay the whole lot back.
Yeah.
And if the collateral doesn't cover it, we have to. It's on us. So part of the investment incentive is to make sure we're not invested in something that's going to collapse.
Let's go through your
All right.
presentation quickly.
All right.
And then people can see visually what it is
Yes,
that
I think
we're
that
talking about.
makes sense.
All right.
Okay. So the first thing is, from a presentation point of view, this is information session only, right? It's not advice or anything. We've got to say that from a financial services point of view. But what I want to specifically talk about is all right, what we can invest into. All right. Firstly, there's a whole heap of things that we can invest into. The SARS allows us to invest in, as I say, they allow us to invest in almost anything except for a very specified list that you cannot, that you cannot invest in, like alcohol, tobacco, what I call the sex, drugs, rock and roll list.
I like alcohol and tobacco.
Yes, but you can't invest your 12J money in that.
Which is true.
All right, so that is that.
Yeah.
And the other thing is there's two other things you cannot invest in. That's fixed property, and you cannot invest in financial services.
Okay,
So,
before we continue,
Yes.
just for clarity, if you can't invest in fixed property,
yes,
in essence, student accommodation, those kind of things,
Yes.
does that not count as fixed property?
it's fixed property. So that's the exception. There's two exceptions
Okay.
in terms of the hotel accommodation. I'll call it the accommodation industry, and student accommodation, which is sort of part of that, a subset of it. So you can set up a bed and breakfast, for instance, right? Because that's tourist related, and you can set up a hotel.
Yeah.
Right, and you can set up student accommodation.
Understood.
But that's where the fixed property, you could say,
Concession ends.
ends.
Yeah.
You can't buy your house with 12J money, for instance. So basically, we've got a whole range of products, there. But the main thing is
Next slide, yeah.
is that from a point of view of Section 12J, it's an extreme tax break that you can be afforded. Companies with profits, in other words, the company's got profits, they can use 12J. A trust and also individuals that are paying high levels of tax. This is not a trick. This is straight through the front door at SARS. When you actually make your Section 12J claim or against it, it's not something you need to apply for. It's something you claim. It's like when you submit your taxes, nobody is afraid of, for instance, making a retirement annuity claim. There's your income. If you make your retirement annuity claim, and everybody's been doing that for years, your taxable income comes down, and you get something back from the taxman. Everybody does that year in, year out. When we talk about 12J, people are scared, but it's just a much bigger claim off your income tax. It's exactly the same mechanism. There's your income minus your tax. You get that tax back. It's a permanent transfer of that tax back to you. You don't ever have to pay it back as long as you have invested for a minimum of 5 years.
Sounds like a good deal to me.
Yeah, so that is a good deal. All right. So it's important to that people understand that it's available to everybody. If the minimum investment is $1 million, all right. If somebody's got less than $1 million, we can actually put them into partnerships so that their joint income goes over $1 million. So we can take people who's maybe as little as 400,000 income. They're still paying about 80,000 rand in tax. We can get that back and invest it for them.
So in other words, I don't have to earn in the highest bracket.
No.
If I earn, let's say, 500,000, for instance.
Yes.
You'll partner me up with somebody who's also earns 500,000.
Yeah.
And together
Or
we make up
even
that
700,000. It doesn't have to be equal, but
Yes.
You put the joint income over $1 million, and the partnership then is an investor.
Understood.
Right. From that point of view.
And what is the maximum?
The maximum for trust is 2.5 million. The maximum for an individual is 2.5 million, and for a company is 5. So let's say, for instance, an individual has 3 million rands worth of tax. They can do 2.5 million rand Section 12J investment. Their income will go from 3 million minus the 2.5 million. They will pay tax on 500,000. They will get about 1.1 million rand that actually goes towards the investment. Right, and that is what makes this such a strong, powerful investment incentive.
How long has this 12J incentive been around for, Chris?
It's been around for 11 years already.
And the rumors are it's coming to an end.
The government is reevaluating to see whether they're going to extend it or not. It's already been extended. Right, a few years ago they extended it to June 2021. All right, now we're going to see if they're going to extend it again. It's one of the very few mechanisms that actually genuinely affords small, medium enterprises to gain access to capital. All right, and that's why it's an important thing, because the small, medium enterprises are the engine of job creation. It's also where the biggest job losses are occurring, because it's under so much distress. The large companies have sailed through COVID much easier than the small businesses. And this is again an opportunity for small businesses to recapitalize.
So let me get this right. So small businesses can invest their profits, theoretically,
Yes.
their taxable profit.
Yes.
What would have been taxed of that?
Yes.
And individuals can also do the same based
Yes.
on however much
Yes.
they earn. And then the SARS, obviously, through this instrument,
Yes.
can then say, because you're investing,
Yes.
you can then use that. You don't have
Yes.
to pay it over, and
Yes.
this will be dedicated to Section
Yes.
12J. I just need clarity on those two aspects.
Yes.
The one being that, how easy is this to do? I'm watching, I'm one of
just-
the viewers.
it's
Where
just-
do I go?
It's really very easy. There's two things you have to do, and that has to be done before the 28th of February. And 28th of February, if you go after the 28th of February, this year's taxes are gone forever. Right. So you have to do, for us, a commitment to invest and at least and pay the actual securing deposit, right, before the 28th. If you cannot pay the full securing deposit, at least a deposit on the deposit, if you
Yeah,
like.
yeah.
There must be something from your bank account to our bank account that proves this transaction took place before
All
the
right.
28th of February.
So we've got a mini video on
Yes.
Section 12J
Yes.
that we're going to play.
Yes.
And this video is going to allow us to do that. I'm getting a cue. I can't quite see what that is. There's a question on the screen. I can't see that far either.
Yeah. Right.
Well, okay, cool. We'll handle the questions afterwards. So,
Yes.
Chris, is there anything else which is quite material on the Section 12J that we haven't covered for now?
Yeah, I think the main thing, and I think on the screen is specifically the
Yeah.
actual full structure loan to the investor. The investor then makes the investment. The refund can be then gained from SARS. That goes against the investment. Then we place that investment into a qualifying company. The Joseph company is a qualifying company for us, and we actually generate that investment as a consequence.
So, Chris, we've got a question from Norma, somebody who's joined us online, and what they want to know, what Norma would like to know is that, so if I've already filed my tax returns for the last financial year,
Yes.
will I have to wait until the next year to use a Section 12J?
No, they need to make the commitment now, okay? So that when they file their taxes, when the tax season opens in July, August this year, they file their taxes, they submit their 12J certificate, the
Okay.
taxes that they've paid then come back to them, and then they can pay that into the investment.
All right, understood.
Yeah. So what we want the viewers to do specifically is to commit this year's taxes before the 28th of June.
Now,
And then next year's taxes. Yeah.
Okay. Now, just hang on. By saying that commit before the end of this year's taxes, what does that mean practically?
It means sign the commitment to invest and pay the securing deposit, so that before the 20th of June, so that this year's taxes are covered to actually get back and put into an investment.
All right. Now, we're in February right now.
Yes.
February ends now. What is this looming deadline? Because you're speaking about June right now, just so
Yes.
that we don't confuse the
Okay.
dates.
So we've got effectively 2 tax years. Let's assume the sunset clause comes and they don't extend it. We've at least got this tax year that ends on Sunday. Right, in other words, in the next few days.
Yeah.
We've got this year's taxes that we can actually encapsulate and put into an investment. Remember, the viewers need to understand, if they don't do it, their taxes go, right, to SARS and stays with SARS. It never comes back. It's not like you're getting that you've got a pot of money that you say, okay, do I invest this in this
It's a use
scheme
it
or
or
not?
it's a use it or lose it kind of.
You will either do the 12J and get your taxes back and put it there, or you lose the taxes completely. You lose that opportunity for the taxes. And that's, you could say, where the short circuit sometimes happens, because people say, but how is that possible? Don't worry about it. It's an incentive that we are given that we can use. So we need people to commit to this year, and then the next tax year to commit before the 30th of June. So make it just March, just do it. All right, so that you've got both tax years. So let's say somebody is earning, that's 1.2 million, and we get 400,000 back. You get 400,000 back in the next tax year. They've got 800,000 in capital that they would never have had that becomes live from an investment point of view. And the nice thing about the Joseph Corporation, it's into a property-related investment. If things go wrong, you've got the property asset as salvage to at least recover something. And let me tell you, whatever you get back at the end of 5 years, obviously we want to deliver a good return.
Yes.
All right. But let's say, for instance, you put in 400,000 and it goes horribly wrong and we can only get 100,000 back to you. It's 100,000 that more than you would have got if you didn't make the investment. If you don't make the investment, you've got no chance of getting anything back at all. But these kind of investments are actually quite reliable, okay, because it's got the hard asset backing, and you can expect if you put 100 rands of taxes in now, you will probably get about 150 to 170 rand in investment return. So 400,000 now becomes 600,000 in 5 years' time, which you when you get out, you will pay capital gains tax on. But if you've got
on the 200,000,
yes,
okay.
If you've got 400,000 now from your taxes and 400,000, then you stand in line to basically to get 1.2 million back in 5 years' time. If the investment works out and all these things, you're taking normal investment risk. There's no magic about the investment that you've got. It's just where do you get the capital for that investment.
Yeah.
And because it's geared, the prospect of generating those returns are quite good as long as the underlying operation is solid and sound. We've partnered, we are financial people. We at Impact Empowerment Ventures, which is the 12J venture capital company, we are financial people. We don't want to be running student accommodation. That's not our expertise. So we see ourselves as the financial partners, and the Joseph Corporation is our operating partners. All right, and that's basically where we have a good partnership, right? Because we are absolutely delighted with the skills and opportunity set that we find in the Joseph Corporation to actually drive projects that will deliver good returns to our investors.
I like how you wrap that up. Very wonderful. Before we even go further, because I can't see a lot of the questions that are up on screen, but in terms of the interest of time, I'm just going to go through one or two more questions with you. And if anybody's got questions from the floor or from the viewers, please just feed them to me over there. And then after that, what we're going to do after section 12J, we're going to play one more video which explains exactly what you said relative to the property investment and student accommodation in particular. And then we'll have Fuller Capital coming on. All right.
You see, this is one way that people can participate where they would not normally be able to. Let's say you're a salary earner, you're living from paycheck to paycheck, you're not building up any capital, etc. Here you can release a hell of a lot of capital that can, in 5 years' time, pay off a bond, buy a car, whatever, or just build up something for your pension.
Is there an easy to fill out form type of thing, or will the people from this the Joseph company get hold of anybody who's interested in registering for 12J now? Yeah,
I think we do firstly get the commitment to invest form from us. I think it's available. We'll email it to you immediately. If anybody online, we can access it.
Drop us a mail, your email address and details.
The one thing we emphasize, because of the time, if you don't get it in before Sunday, well, effectively Friday, because that's the last business day, you lose your taxes. We are happy to accept let's say a tentative thing where somebody still wants to do their homework. That might take a longer time for them to do their due diligence. If you come middle of March and say, actually, I'm not sure if this is me, we'll cancel it, pay the money back, not a problem, no cost. All right. It's just that we can always cancel in retrospect within a few weeks. It's not.
But you can't extend the deadline.
I can't invest in retrospect. All right.
And that's 100% understood. All right. Let's do the section 12J video. Thank you very much, Chris.
My pleasure.
Hi there. What if you could invest in property using your tax rebates? Well, now you can. The Joseph Company has created an opportunity for you to invest in property using your tax rebates. And this is how. Since 2009, investors have been getting tax back through Section 12J of the Income Tax Act. Section 12J allows investors to deduct the full cost of specific investments against taxable income. That's right. Through the J12 company, you can invest 100% of your income tax into profitable investments in student accommodation. This benefit is available to individuals, companies, and trusts. It can be utilized against normal income as well as capital gains tax. The J12 company has partnered with Impact Africa Investments to help you invest in selected profitable businesses. For more info, visit our website, call us, or let us call you. Invest now, save your tax, and be more. The J12 company, raising a company of people.